Okay, folks, welcome to Red Pill Markets. Today is March the 11th, 2020. You're looking at the market close. Stocks finished lower today. They wiped out yesterday's gains and even a little bit more. So Dow was down almost 6%. S&P 500 down almost 5%. NASDAQ down 4.75%. Small caps down 6%. The small caps concern me. Small caps, when the markets go up, they gain the least. When the markets go down, they lose the most. For now, we're just going to concentrate on QQQ, which it'll be the same thing as NASDAQ, but technically all four markets are in a bear market, which is 20% down. That 20% down, we're not going to really worry about that at the moment. We're going to consider a bear market 30 to 35% down for an extended period of time. So even though technically they're in the bear market, this is how they trick you. They'll have you believe the markets are going to start going crazy here, and then they'll push it up once it hits like 27, 28%. They'll push it up 15, 20% as soon as it hits that. But we'll go over that later on. We just have to wait to see how that pans out. Let's look at QQQ. I can tell you what we're watching for on QQQ. Okay, for QQQ, if the market finishes below the 190 area, next stop will be about 180, and then 170, 160, 150, 140. I think 140 area was back in June of last year. So 140 from here will be what? 55. So that'll be what? 1, 2, 3. That'll be a good 20% down. So if it does finish about 140, if it definitely gets to 140 in the next few weeks, we need to be looking at buying when it gets down to like the 140 area, because that'll be from a high of 240 down to 140. So that's 100 divided by 240. So 1 out of 2.5. That'll be a nice little correction. That'll be like a 40% correction, 40. But naturally, we have to wait and see. Earlier today and yesterday, the Fed and the president's been coming out talking about different stimulus, like bailing out the airlines, the banks, healthcare, cruise ships. They've been talking about adding stimulus to all of that, trying to get that under control. So it worked for a little while. And then I think the UK came out with their, or the Bank of England came out, cut their interest rate by 0.50. Then the market started going haywire after that. Now, ordinarily, well, it's been a while since we've seen swings this wild, but ordinarily, I would have took a risk and went long for tomorrow, but I didn't, because guess what? Tomorrow, the ECB comes out. They're expected to cut rates by 0.5%. So if these global economies are doing so well, why are we cutting interest rates? You do not cut interest rates if the economies are in good shape. Never happens. Not one time in history. You cut when they're in bad shape. And it actually takes them a while to decide whether to cut. But they've known for a while economies were in bad shape. They're starting to cut. And then I think somebody is something's going on early next week. And then on the 18th of next week, the U.S. is expected to cut another 0.2 to 0.5. So if this market keeps going down and they do more cuts, it's not necessarily going to go up. Even if they announce quantitative easing, there's no guarantee that the markets are going to go up. Even if they do payroll tax cuts, no guarantee it's going to go up. Yeah, it'll go up one day, down the next, up one day, down the next. By the end of the week, you'll finish lower than the beginning of the week. But we're just keeping an eye on it. If it doesn't go up tomorrow, our next level we're looking for is 179. I think it is 178, 179. So that's about a little over 10% below where we are now. If that doesn't hold and we don't get back above 200 within about a 2-week period of time, 3-week period of time from there, you might as well go ahead and count on 160, 150 area. If we don't get above 180 2 months from then, you might as well count on the 150, 140 area. And if we don't get above that, I haven't even looked past that, because that'll be a definite all-out market crash. So you might go down maybe another 20% from there in the next, by the end of the, or not by the end of the year, but by this time next year. But we're taking one step at a time. I'm sure these clowns have something up their sleeves, but we're watching. I gave you the levels to watch for on QQQ. First thing we're looking, we want to make sure we don't finish below 190 in the next week. And then we'll take it from there. So we'll go over this daily. That's QQQ. Let's look at IWM. IWM has just been getting beat around. So if you look at Monday's close, IWM was let's say 130. Yesterday it closed about 134. Today it closed 125, 126. So today closed below Monday's big drop. That's normally not a good sign. Of course, they'll always come in and try to juice it up, but IWM has to get above 138. I don't really see it jumping right past 138. If we don't get above 138 in the next couple of weeks, we will be a lot further down. Let's look at Dow Jones Transports. Dow Jones Transports, the furthest it came down was Monday's low. Today finished lower than yesterday, but not as low as Monday. So if Dow Jones Transports finish under 8,000, next step, I didn't look at it, but the next step might be well, let me change it to a weekly. Okay, next step is probably 7,600. And if it gets below that, next step is probably 6,000. But we'll just take it a little bit at a time. Let's not get too far ahead. Okay, let's look at SPY. SPY finished. It actually went lower than Monday's low, but it finished it closed right at Monday's low. So if the markets finish under that, it's going to be a nice drop. First step for SPY, it needs to finish above 185. Then it needs to finish above 190 and preferably above 300. If we don't get there in the next 2 or 3 weeks, we may be down to like a 260, maybe 250 area. Will probably be our next stop. 250 from here is about 10%. Let's look at Dow Jones. I know we did Dow Jones transports, but let's look at Dow Jones. Okay, so Dow Jones finished lower than it did Monday. I'm pretty sure that's not a good sign, but I'm still learning how to read these charts. So let's look at this weekly chart. Dow Jones. Let's see, 23. Okay, there we go. Dow Jones' next step is probably going to be, oh, that's 23. Hold on. 23 is looking like 22,000. 22,000 might be its next step. If it gets below 22,000, you're looking at, oof, I hate to even think of it. Probably 2,000 and then maybe 18,000. So again, we're keeping a close eye on all of it. Let's look at XLF, which is the financials. Let's look at the daily. Okay, financials. Financials dropped as far as Monday did. They closed about the same as where Monday did. So we're hoping that's going to go up. There's no guarantee. Let's see, it finished at 23. Let's look at the weekly. 23. Oh, okay. So it finished right about where it started December at for financials. That's right where it started December at. December 18. Oof. If it gets lower than that, you're looking at 19. If it gets lower than that, you're looking at 17 and then 16. And then 15. And then it's just going to get ugly if it drops lower than that. That's the financials. Thank you for watching. Like, share, comment, and subscribe later.